TB Cycles here with the weekend video on March the 15th. So I think my 2-week oscillation is still working, and we made a 2-week oscillation low on Thursday, and now we are making a bounce. It should top out around Tuesday, Wednesday, and then we drop down with the C move of this correction, an A, B, C, but I don't think this will be a devastating deep C, but kind of a double low. Probably a little bit deeper. But I have some variants of this scenario. We'll come back to that. You know, we have had a 2-week oscillation low at this point. At this point, this one was a little bit early. Then we had this low, and then a confusing drop in the middle, but this is the next 2-week oscillation low, and this one was very short-lived, only a 1-day bounce in this upswing. Mostly we went down into Thursday, and as you see, the next low is around the week of March 24 to 27. But for new viewers, and you know, just I want to zoom out to see the context of this market, because going back 200 years we have a 28-year cycle, and we have you know, it's oscillating, or it's either a war cycle or a financial crisis cycle, and the current one is a war cycle, and this is a 56-year cycle, the double. So this currently is a war cycle, it's an inflation cycle and high interest rate cycle. And we are in the top of this channel, and if you look at other valuation indicators, you know, we have the Buffett indicator compared to GDP. We are at extreme pricing. The market is you know, it's highly priced. We have the Schiller PE, we are very high price on the market. And here is the 56-year cycle. Here we have global deaths in wars and conflicts. And you know, an analog is the 28-year cycle from the 1970s, here in red. And currently, well, if we should repeat that one, we should crash down the next year or so. And you know, looking at here in red is the average 28-year cycle. It is going down into mid 2026, and you know, it's a time where wars often has begun. Here also we have the 3.5-year cycle. There's often also a 7-year cycle to be seen here in this 28-year cycle. So when we focus at the 3.5-year cycle, it is like this. We had been in this trend channel with the start of a new 28-year cycle in 2009. We are seeing signs of weakness. We haven't reached the top of this channel, and we could break, you know, this midline sometime this spring or summer. And we are currently in this yellow topping phase of the cycle, but we may already have topped, like my dotted scenario up here suggested, a bull market top around February and a shoulder coming up later this spring. So there's no guarantee that this bearish part of the cycle will materialize into a deep bear market. It could also be a kind of a more sideways consolidating market, but considering the previous valuation indicators I showed you, and the 28-year cycle and so on, I'm highly suspecting a very bearish market the next year, or a bit more than a year perhaps. And if we look at some shorter cycles, we have the 17-week cycle, and it is related to planetary cycles and solar activity, but that's not important to know. Anyway, within this cycle and other cycles, my interpretation is that the market likes 10-week oscillations, 10 to 12 weeks, and we have these well, these oscillations, they have to adapt to the cycle condition. currently we are within this 10-week oscillation. We are approaching the low, and we should begin another one, but this is in the context of a bearish cycle into late May. Now I think my new main scenario is this one. So we are approaching the end of this current 10-week oscillation, but the cycle condition is still bearish, so we should make a shoulder and then the next 10-week oscillation low around early June. And looking at the daily wavelets, I have set up, oh come on. Well, with bull market rules, we should look for a low and a 10-week oscillation low around this time, but I think maybe bear market rules apply now, and then we should look for a low in 2 weeks. That's my main scenario, and I have this projection. I'm throwing away this old because that failed, so now we have this new one in blue. And it is suggesting a bounce topping around Wednesday this coming week, around the Fed meeting, and then dropping down to the week starting Monday 24th. But it could be a double low. Be careful, this could be a bear trap, but we could or should make a lower low, and we potentially could capitulate several percent below this previous low. So I'm not sure exactly how this low will turn out, but some low in around 2 weeks' time. So that's what I showed you to begin with here. We need this last 2-week oscillation. It will top out Tuesday, Wednesday, and then drop down around the last week of March. So we could switch over to hourly data. Dow Jones Industrial, and I think, the 2-week oscillation here, I'm not quite sure about that one, and I discovered this strange 3-week oscillation. I haven't seen that one before that I can remember. I'm calling it the mystery magenta, and if I were to, I'll come back to that one. Anyway, I think now my scenario is something like this, and this gets a little bit messy, but we have hourly data here going back to 2008, and this is my indicator of oversold, overbought, and we were extremely oversold last week. There's only a handful analogs being that oversold. But when comparing a bigger group of oversold conditions and then analyzing what happens when we get a bounce, then I get these 3 main scenarios. So the most common is this green one. It is topping around Tuesday, Wednesday, around the Fed meeting, and then making a double low around 2 weeks after this first low. And it may drop down to around this level. This is an average. Sometimes it's a higher low, sometimes a lower low, but we rarely go very much deeper than this first low. And then we have this this V bottom, strong rally. I don't think we will get that one, but the last one is a little bit interesting, and it suggests we are bouncing up to the Fed meeting, and then we get another squeeze to the upside. But it's call it a bull trap, and then we get this lower low 3 weeks after. That's the mystical magenta that I showed you. But again, not a very much deeper low. So a couple of percent lower than this first one is possible. But my primary scenario is this green one with a double low around, March the 24th to 28th sometime. So that's for this weekend, and see you in the next video.